Hello and welcome to USAID's Climate MEL Learning Series. This is the Climate Reporting Foundation session. In today's agenda, we will look at some reasons to report on climate. We will also look at climate direct and indirect funding, and we'll also look at double counting, contribution, and some other concepts that are relevant to climate reporting in general. So the first question to ask is why report on climate at all? As many may be aware, USAID has a climate strategy that goes from 2022 to 2030 and aims to reduce emissions, build resilience, and mobilize climate finance, among many other things. And under this climate strategy, we have 6 targets that we aim to achieve by 2030. In order to achieve these ambitious targets, we need to make sure that we have accurate reporting. That also means capturing all of our results across the agency's portfolio. There's few ways that operating units can contribute to the climate strategy, from strategic planning, operational planning, to activity design and implementation. Today, we're focusing on performance reporting on our priority indicators. So when I say priority climate indicators, I mean a subset of our standard indicators that monitor at the outcome level and not at the output level. This includes climate finance, GHG emissions, hectares of land under improved management, and people supported to adapt. And now, reporting on these indicators is easier than ever before because USAID Center for Climate Positive Development is excited to launch the Global Climate Change Extended Indicator Handbook, which is a comprehensive document that covers a range of frequently asked questions, goes through specific scenarios, and makes recommendations on data collection challenges. Now let's get into some specific concepts that are relevant to climate reporting. So most of us have an idea about the difference between direct and indirect climate funding. Direct climate funding refers to funding allocations tied to one of the 3 climate program areas or earmarks, that is EG11, which is adaptation, EG12, clean energy, and EG13, sustainable landscapes. Indirect funding refers to funding from any other USAID program area, for example, humanitarian assistance, agriculture, global health, that also has a climate-related benefit or result. The point we want to emphasize here is that all operating units, regardless of funding type, can contribute to the climate strategy. That is also to say, all USAID climate standard indicators are required as applicable, regardless of the funding type. To learn more about how different sectors can contribute to the climate results and strategy, check out our webinar on climate integration reporting. The link is available on Climate Links. So let's look at the concept of required as applicable, which includes 2 rules. The first rule is that if an activity achieves a result that can be reported towards a standard indicator, then it is required to report it. The second rule is that reporting on climate standard indicators is required regardless of funding type of an activity. So the Extended Indicator Handbook goes through various specific scenarios where activities can decide whether or not to report on a climate indicator. The attached slide deck includes this table with various RAA scenarios, and we can go through an example to demonstrate one such example. In this activity, biodiversity funding supports the conservation of 10,000 hectares of biologically significant forest. It reports these as a result under the biodiversity indicator, which is EG 1022, hectares under improved management. However, the conservation of these 10,000 hectares also results in a climate mitigation benefit. Therefore, the activity can also report the same 10,000 hectares under EG 13.8, hectares under improved management that are expected to reduce GHGs. This is because these indicators measure different benefits. They both demonstrate a biodiversity success, but also a mitigation success. And they do it separately, but in similar ways. That means their methodologies and definitions are similar. So the same activity should also report on EG 13.6, that is GHG emissions reduced or avoided through sustainable landscape activities. The activity could even report on EG 11.5, which is people supported to adapt to climate change, if any communities were made more resilient to floods, droughts, or forest fires. So, in the previous example, we acknowledge that there's an added cost to collecting data for any additional indicator. In fact, a common barrier to climate reporting by activities and operating units is a lack of financial and staff resources. So, where resources are limited for OUs and IPs to collect and report climate data, they can consider some of these strategies. The first is to prioritize the outcome indicators. As I mentioned, the priority indicators are a subset of the standard indicators that operate or monitor at the outcome level and not at the output level. For example, when there is a choice between EG 11.1, which is people trained in adaptation, versus EG 11.5, which is people supported to adapt, we would prioritize EG 11.5. The second is to take into account the scale of your results. So activities should determine whether the size and scale of results justify the data collection costs relative to the scale of the award and the scale of the climate strategy targets. For example, an activity could determine that 35,000 metric tons of carbon dioxide equivalents are not yet worth reporting given the scale of the activity, and they might choose to wait another year to gather more results and then report their GHG reductions. 3. Use estimates where appropriate. So all estimates should be reasonable, defensible, and all assumptions and methodologies should be documented in a DQA, that is a data quality assessment. The fourth strategy is to leverage existing resources. So there are many tools online that can help estimate results, including USAID's own CLEAR tool, which looks at greenhouse gas emissions reduced from clean energy, and a FOLU, which looks at sustainable landscapes. We can also look at past DQAs, government data, publications from multilateral institutions like the World Bank. The fifth strategy is to find synergies across indicators within USAID. So there's many indicators within USAID that have similar definitions and that can be crosswalked towards the climate indicators. For example, the one we just looked at, the biodiversity hectares indicator, could be crosswalked to the EG 13.8 climate indicator. Water also has climate disaggregate for their finance indicator, and there are also indicators in Feed the Future and private sector engagement. So more on that can be found in the integration guidance included in the Extended Indicator Handbook. Overall, we encourage OUs to be creative but conservative and make sure that all the results reported are reasonable, defensible, and all assumptions are documented in a DQA. So a quick note on DQAs, as they can be a helpful tool in replicating data collection methods, approaches, and justifications for future climate reporting. Note that, as I mentioned, some non-climate indicators or disaggregates directly crosswalk to climate indicators because they have similar definitions or methodologies. And in those cases, DQAs become much easier and quicker. So now let's look at double counting. Double counting refers to reporting the same result towards the same indicator more than once. That is, we should not report the same result towards the same indicator more than once, but this does not mean that a result can only be reported once, period. This is because USAID results are generally tracked by development sector or initiative, that is, economic growth, humanitarian assistance, private sector engagement, and there can be co-benefits across these sectors. So where applicable, the same result can indeed be reported twice. For example, the same dollar that was mobilized by, say, private sector engagement can demonstrate a success of PSE, but it can also demonstrate a success for climate change finance mobilized. Again, the Extended Indicator Handbook goes through a range of double counting scenarios and provides guidance on how to deal with these situations. For now, let's look at a quick example. So a USAID activity supports the development of a Green Climate Fund project proposal. In year 2, the project secures funding for an intervention and reports 20 million metric tons of carbon dioxide equivalent projected emissions avoided during its lifetime. In year 5, in a later year, the project receives additional funding and is now expected to avoid a total of 30 million metric tons of carbon dioxide equivalents. What should it report to EG 12.7, that is, greenhouse gas emissions avoided, projected? In year 5, they would report 30 million metric tons, and in option B, they would report only 10 million metric tons. So the correct answer here is B, which is 10 million metric tons of TCO2e. And we cannot go with option A because that would be double counting the initial 20 million that they already reported in year 2. In the next example, USAID engages with a private sector partner that agrees to give a grant of 5 million for a climate-smart urban design project, which includes funding for both low-carbon electrification, which would count as clean energy, and flood planning, which would count as adaptation. The partner doesn't provide a clean energy to adaptation split of the 5 million grant in time for reporting. So how could this project report its climate results? In option A, the activity reports 5 million to EG 11.4, which is adaptation finance, and the same 5 million to EG 12.4, which is clean energy finance. In option B, the activity estimates and prorates the amount. For example, it determines that the clean energy and adaptation portion or emphasis is roughly equal, so it reports 2.5 million to EG 11.4 and 2.5 million to EG 12.4. The correct answer here is B, where the same dollar has multiple benefits, but it is reported only once. So a single dollar may have multiple climate benefits, which is in this case clean energy and adaptation, but it can only be reported once. Prorating can be done based on your knowledge of the grant, any work plans or documentations that are available. It doesn't need to be precise as long as we are ensuring that no double counting is happening and that we're highlighting our successes in both clean energy and adaptation areas. This can depend on the funding of the activity or any prior agreements around how the results need to be communicated. Another example demonstrates an additional double counting scenario. So an activity trains 100 agricultural extension workers in drought preparedness in FY24. In FY25, the same 100 extension workers are trained in microfinance and market access. So how should this activity report the number of people trained? In the first scenario, in option A, 100 people trained are reported across FY24 and 25, so they're reported once. In option B, 100 people are reported in FY24, and then they're reported again in FY25. The correct answer here is B. So the rule here is that we should report these 100 extension workers if there was an additional benefit received. If the same training on drought preparedness was delivered in FY25, then we would not be reporting these 100 additional extension workers because no additional knowledge was gained, and that would count as double counting. So the next concept we'll look at is contribution versus attribution. So the concept of attribution versus attribution applies to all climate standard indicators. We understand that there can be some apprehension sometimes to report on these indicators, especially when other partners are involved. There can sometimes be a risk that we might appear to be overcounting our successes by claiming all of the climate finance or emissions reductions from an activity. It is very important to remember that our indicators capture the scale of our impact. So what we are saying is that we contributed to a success and did not single-handedly bring it about. So it can be helpful to use words like USAID supported, convened, or contributed to a result when talking about our results. So in short, we should not let the lack of attribution stop us from capturing our results. The last conceptual topic we will discuss is the timing of results. So ideally, activities should be able to plan their results, data collection, and then report the results in the same fiscal year as when the results occur. And all of this should happen before the activity ends. However, there are many cases where reporting does not precisely align with the timeline. For instance, the Green Climate Fund announces funding for a USAID supported proposal after the activity ends. In another example, a sustainable small business shares performance data as they occur beyond and across different USAID activities. A climate information service is scaled up by a private sector partner after the activity ends. Or USAID might support a carbon tax that starts generating revenue only during a follow-on activity. USAID might conduct an ex post evaluation of GHG impacts of a completed activity, or a business that aims to sell 5 million worth of solar heaters in future years, which could result in 100,000 metric tons of CO2e avoided, and none of these results are yet actualized. So here we can pause and think about some ways that you may have collected data beyond the end of an activity or reporting cycle. Some ideas that we want to share here are collecting data from publicly available announcements that happen after the end of the activity. Data collection and reporting can also be done by a follow-on activity. Data collection can be done by an OU's MEL support contractor. Data collection can be done by USAID staff, such as a former COR, by leveraging existing relationships. Or an activity could use ex post assessments or evaluations to assess results after the end of an activity. Yet again, the Extended Indicator Handbook will outline various scenarios and considerations when it comes to the timing of results. The overall message here is that way more is possible than what people sometimes assume, and we can work together to make sure that we are capturing and learning from the results of our work. And lastly, this is where the rubber meets the road. We'll look at PPR and PPR targets. So some basics here are that the standard indicator performance is reported annually through the performance plan and report, which is the PPR and DIS. The PPR contains three essential components, which is indicator results, which is the quantitative amount, out-year targets, and indicator narratives. For targets, we should make sure to explain the general basis on which the targets are set for each indicator. Note that when reporting results in the PPR for the current reporting period, deviations greater than 10% do require a clear and concise deviation narrative. We should make sure that our targets are specific, time-bound, ambitious, achievable, and have a strong rationale. Some factors that operating units can consider when setting their targets include the scope and budget of an award, the bureau or mission context, the host country's interest in climate change, as well as climate-specific characteristics of the host country, which include biophysical potential of land-based emissions reductions, current energy resources, and projected future energy demand, the vulnerability of the population to climate change, the effects of climate change. And here we want to emphasize that we do read, value, and need well-written indicator narratives. The current and future year indicator narrative in the PPR provides important context to the quantitative results. This should include the names and awards of implementing mechanisms that contributed to the result, the value of the results achieved by each award, description of out-year targets, description of the activity that contributed to the result. So what do you think is missing from this narrative? So an example of a better narrative here specifies which activities supported which projects and which results. In this case, it even gives a bonus of the GHG amount over the next 20 years. While this is only an example, we also encourage OUs to include an explanation of where future results indicated by the FY21 and FY22 targets here are coming from. You will note that there is a deviation of 5%, which means that a separate deviation narrative is not required. So remember that the PPR allows for 3,000 characters So please do make sure to use that space to provide as much detail as possible. So thank you for attending the webinar on Foundations of Climate Reporting. Please send your questions to the email ID included in the slide deck. Thank you.